Diane King Hall, host of Morning Movers, is with us, and we're looking at Estée Lauder, and that's one of the big losers in the S&P 500 this morning. Some of your thoughts there?
Yeah, it's a worse than expected quarterly report from Estée Lauder. The results were not pretty across the board. They reported a big loss, much bigger than expected. So heavy bleeding on its balance sheet. The loss coming in at $1.51 per share. That's nearly double what the loss was a year ago. So the hemorrhaging is expanding. A year ago it was 79-cent loss. You saw this sales decline. Revenue fell 12% year over year to $3.4 billion. That was way down by skincare sales, especially La Mer. And one of those where they saw weakness was in Asian markets. But it wasn't just about skincare. Skincare was down 16%. Makeup sales down 11%. Hair care sales down 15%. The only bright spot here was fragrance sales. You saw that rise 4%. Part of that has to do with Jo Malone. So that Jo Malone is a standout. But that's not enough to account for the weakening demand that you're seeing across a lot of its brands. And it's not just about the quarter that has gone. The quarter ahead, their guidance overall and for 2026 is weak. For fiscal 2026, they're projecting sales to rise to either be between flat to 3%. The street was looking for closer to about 3% growth. Their earnings guidance, they're guiding for between $1.90 to $2.10. That's weaker than what the street is looking for. Oh, and by the way, tariffs are going to have a big impact, so expect to pay more for your makeup, for your skincare. They're warning that tariffs could weigh on profits by about $100 million this fiscal year. They continue to have this weakness in China. They've talked about that's been a challenge, as you know, Nicole, for some time now. Consumer demand, they say, still remains subdued. That's dragging on overall global demand there. They also talked about some inventory issues. North American retailers, they say, are holding on to leaner stock because of some weakness in consumer confidence, although we've seen some improvement in consumer confidence recently. So, you know, their talking point there, I don't know if that completely holds true, but competition. They have got competition from TikTok shops. A lot of the young people, that's where they buy their goods from now. They just go on TikTok shops. So Estee Lauder has to, you know, kind of find its way. And they had been for some time overly reliant on Chinese consumers who are slower to adapt to, say, new beauty trends, Nicole.
Yeah, and look, I mean, overall, I even saw that they are cutting more jobs. They had already planned on cutting, I think, about 3,200 jobs. Now they're talking about another 3,800 jobs. The China story is a difficult one, though. They said they expect a return of mid-single-digit sales in China. How about also duty-free sales? They said those were weak. And the question is, how much are people willing to spend? Often we thought these were not necessarily discretionary anymore. Some of these things became more of a staple or a necessity, but maybe not.
Yeah, that's right. Exactly. That's the question. And then also keeping up with the trends, right? You know, say the brands that I grew up with, there are different brands that Gen Z is using now. I know one of the challenges I hear from a source is Smashbox. That was once a tried and true, but it doesn't have the same shelf space that it did once upon a time. And that shows you what the interest is, what the appetite is. That's just to name one of their brands in general. So they are having, you know, kind of shifts that they need to make in their business. They're trying to make those shifts, creating some efficiencies, obviously, through the job cuts. But with the job cuts, that also entails some costs that would occur as it relates to restructuring and charges that they have to take from that. In terms of analyst response, not seeing a lot of activity around it. Tulsi is out with they're maintaining their stance as market perform. So essentially, you know, they see it at where it lives right now. They've got a $99 price target, so they actually still see some upside from here, but it's taking a leg down, obviously, off the back of these results, Nicole.
And just the tariffs. I mean, it says it anticipates $100 million in tariffs, and for some companies, $100 million is nothing, but I would have to anticipate that this will be obviously a story that we'll continue to hear for Estee Lauder. What about Home Depot? We saw some news there. We have Lowe's as well. These names are obviously Lowe's now beating the street. Let's hear a little about that.
Lowe's doing even better than Home Depot did in terms of expectations, because you'll recall Home Depot actually missed on both the top and bottom line, but the guidance is what the street liked. And so Lowe's extending its winning streak from yesterday to today, because it had caught in a sympathy bid yesterday, but it did do better than expected on EPS and their guidance. They raised their guidance there. So the street likes that. And they're also doing this acquisition, leaning into pro. EPS coming in at $4.33, better than expected. Revenue coming in essentially in line with the expectations at $23.96 billion. Comps rose 1.1%. That was in line with expectation. This just shows that demand is holding up well, that it's pretty resilient despite the softer backdrop that we know that's happening within home improvement. So bottom line here is that we did see growth, especially when it comes to EPS there. Their strategy, they're doubling down on these acquisitions. Home professionals, that's a segment they're leaning into. Pros, they've made this deal to acquire Foundation Building Materials. It's an $8.8 billion deal. That's a major distributor serving large residential and commercial pros. Now, earlier this year, recall, Lowe's also bought Artisan Design Group, right? They do flooring, cabinet, countertop installation. So they're really leaning into the pro sector. CEO Marvin Ellison saying these acquisitions, quote, strengthen solutions for our growing pro customers. Nicole.
And then last but not least, we know Warren Buffett started to really show that he was interested in some of the home builders, not all of them, some of them, but maybe there was this trickle down idea that the group had some good footing, but Toll Brothers lower after its earnings. Some thoughts there?
It's been flip-flopping today, actually. So it's hard to read through, how the street is interpreting this one. They did do better than expected in the trailing quarter. EPS came in at $3.73. That's up from a year ago. They logged record revenue. That was $2.95 billion. So that was better than expected. They had more homes delivered, nearly more than 2,900 homes. That's up 5% from last year, higher than last quarter. What's ahead? Q4 deliveries are a little soft. They're seeing approximately 3,350 homes delivered. That's slightly below what Wall Street's looking for. They're looking for a little bit more than 3,400. The average selling price is expected to be around $975,000. So again, there's strength in the luxury market here. Their margins are expected to be at 27%, healthy but not expanding. So that may be why the street is having difficulty with deciding where they're going to take this stock, because it's now higher. Had been lower, now higher. Their backlog has fallen behind. Full year deliveries, they've narrowed their guidance to 11,200. That's a little short of what Wall Street was looking for, 11,300, Nicole.
Yeah, pulling back on that home deliveries outlook. We know that they've been offering more and more incentives. I think it's at the best point for buyers in 5 years for some of these home builders and some of the, buy downs that they offer, so that you can try and get a better rate, for example, than mortgage rates. But maybe we'll find some relief at some point. Right now, the housing market is still relatively depressed.
It is. It's still challenged. I was talking to Erin Sykes earlier today, and she talked about, you could hear the tension in her voice. The housing market is still in a difficult place. There are pockets of growth, for instance, and it's regional pockets like the South, right?
Right.
But there are challenges in the Northeast, which we know well.
Yeah. All right. Diane King Hall, host of Morning Movers. You can check her out there. Thank you for being with us, Diane.